dollar strength, is
Thank
that going to continue to be the highlight of the week? I guess it depends on a lot of things, right? We've got inflation, we've got Powell, we've got so many things coming left and right that could be determinants of this.
Yeah, that's right. I think the U.S. dollar has scope to edge a little bit higher in the near term. Financial market volatility will likely stay high because of loose U.S., at least loose U.S. fiscal policy, combined with the upside risk to U.S. inflation. Essentially raises concern that the Fed may quicken the pace of its interest rate normalization cycle. On Friday, the U.S. lawmakers approved $300 billion in new spending for the next 2 years. Today, at least later on Monday, President Trump or the Trump administration is expected to unveil $1.5 trillion in, or at least a blueprint of $1.5 trillion in infrastructure spending. And finally, later this week, we expect, at least we see upside risk to U.S. core CPI inflation following the pickup in January wage growth. So short-term upside for the dollar intact.
Right. Elias, since you mentioned the budget, put that together with the lingering effects. A lot of the December tax cut flows, of course, have been accounted for in the earnings estimates for earnings season, but have not actually physically been accounted for in, say, wage bonuses or fixed plant and equipment, capital investment in the economy, that sort of thing. These are all to come, to be announced, right, to be confirmed. So these are going to linger over the next several quarters. These are all going to be dollar positive, I'm assuming, or at least that's the trend?
That's a very good question you raised, Bernie. I think, and this goes with our longer-term view on the U.S. dollar. We expect the U.S. dollar to continue to edge lower this year, even though we're seeing potential upside risk in the short term. And the reason we remain bearish on the U.S. dollar is that inflation pressures in the U.S. Will remain subdued. At least we don't expect the core PCE deflator to move back above 2%, at least over the inflation horizon, primarily because of benign or subdued wage growth. This means that the Fed's interest rate or normalization cycle is probably not going to be as more aggressive than the market is currently anticipating, which is 75 basis points for this year. And that's one of the reasons why we maintain our bearish U.S. dollar view beyond near-term upside.